The market took a bit of a turn on Wednesday, and things were looking, let's say, red. But what a rally on Friday. Let's talk about what happened. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap webinar. My name is Chris. I'm part of Riz International, and we are a group of traders who are looking to improve our skills in the market to achieve financial security and independence and be able to make our money work for us, not the other way around. I want to encourage you, if you haven't done so already, make sure you hit that like and subscribe button if you're watching us on YouTube. It really helps. And post down there what you're watching this week. If there's a ticker you're taking a look at, something you want us to take maybe a gander at next webinar, go ahead and post that in the comments, and we'll see if we can't get to it. But quite a busy week in the market, even though we had a bit of a short week due to MLK Day on Monday, so the markets were closed. Tuesday was pretty much a nothing burger, but Wednesday, oh boy, quite a down day in the market. Thursday looked like it was going to continue, and then Friday had this huge bounce off of technical support here right around 3,900. So a lot of action this week, but you'll notice that our trend line has been respected. As always, clearly the market makers are in the chat and they know exactly where my lines are. So they will, of course, respect those. But all joking aside, we really just kind of ran right back here to the 200 simple moving average and closed right on top of it, for lack of a better term. And it was an interesting whipsawy market here over the last couple days. It has been a little tricky to trade. And of course, we are now in earnings season, and that is the big talk of the town right now. So earnings are coming in. We talked a little bit about it last week, but yeah, earnings are going to be in full swing this week. So be aware that there are going to be a lot of movers and big names this week that are going to be reporting. So keep an eye on that going forward. But we are still in this downtrend. You know, we had this period of consolidation down here. Then we had a little bit of a rebound, and then, you know, we came up, we tested this line, and we rejected. So, you know, the 200 has been playing a fairly critical role, but honestly, it's this downtrend that is really holding true to form at this point. So we'll have to see if earnings seasons can break us out of that, or if we're going to see more downside. Now, we did have the PPI numbers come in last week, so they were basically on par for what everyone was expecting. You know, pretty close, for lack of a better term. But, you know, obviously the market reacted fairly negatively to that on Wednesday, and I think what it comes down to is that, you know, more rate hikes are probably in the future is what we're looking at. These rate hikes haven't cooled off the economy as much as they would have liked, they meaning the Fed, and we're probably looking at more rate hikes here this year. Now, of course, the Fed has been, you know, non-committal on that just yet, but I think it's pretty much a foregone conclusion at this point. They need to cool off the economy to get inflation under control, and they have done that to an extent, but not to the extent that needs to be done. So I think that we'll see more rate hikes in the future. That's something we'll be keeping an eye on here. But like I said, this week is all about earnings. That's all that anybody is looking at. And so we will talk about that a little bit later. But let's take a look here at how the market is breaking down right now. And, you know, I feel kind of a bit like a broken record, but energy continues to just roll on here over the past year, up 42% right now, vastly outperforming the market. Now, of course, if I switch this to year to date, we're not going to see all that much. It's rather confusing, which is why I'm not doing that. Let's go back out here to the 1 year view. So yeah, the yellow line here is XLE, which is the ETF that follows the energy sector. Healthcare and utilities are currently right around the zero line. Healthcare is a little bit positive, sitting at about 2.4% up over the last year. Utilities basically flat at 0.38%, and everything else is underperforming. But we do see a lot of, you know, kind of a bit of a curl up here, for lack of a better term, especially on these ones that are really underperforming, such as like communications. We got consumer discretionary, tech, real estate. All of these are starting to really start to curl back up, you know, kind of clawing their way back towards the average, which is the SPY here, which of course is the S&P 500 ETF. Financials and consumer staples are still outperforming the market, but not by much, and are also still negative over the past year. You know, we've been talking about that. Looks like here consumer staples took a bit of a hit this week. But we're looking up nicely on Friday. So really kind of following the market here for the most part, except energy. Energy's just doing what it wants. I do what I want, as the energy sector says, and really just kind of ramping up here over the last few, for the better part of January at this point. All right, let's take a look here quickly at our favorite asset classes that we know and love here. Oil continues to remain fairly channelized here. Let's see, we closed at 81.64 a barrel on Friday. So right in this area where Riz kind of likes it. We don't have a position on oil right now. Obviously, we're not suggesting you take one, but holding this area through the winter, I think, is fairly good in my opinion. We still have some demand going on, but obviously not as much as we would have in the summer. So, oil holding this area, I think, is a pretty good thing. I think this is a fairly sustainable level. And, obviously this 123 area, not sustainable. And we've seen a nice, downtrend in oil. But now we do seem to be consolidating a bit right here between about 72 and, right here around 80 or so. So we'll have to see if we can break out of that here, see if this 85.40 level remains significant or not. But we do seem to be trending up on oil. And, of course, what is really trending up is gold. Gold continues to just roll higher and higher and higher, and getting a little bit ridiculous, in my opinion, way overvalued at $1,900 per ounce. In my opinion, I am not recommending that you short gold by any stretch of the imagination, but still a huge rally on gold so far. So this has definitely been very interesting to see. Of course, gold was a traditional hedge against inflation, really hasn't been behaving that way as of late. And it's kind of why we've stayed away from it, to be honest with you. We've really just kind of let gold do its thing. And, we're just kind of watching here. But a huge, massive rally on gold here since about, it looks like last November. So a real bull run here on gold. Taking a look at the Treasury bond yields here, we still have our inversion, meaning that the 2-year bond yield is higher than both the 30 and the 10-year at this point. So, these 2-year bonds seem to be, performing incredibly well compared to where they were, last year, which was basically at almost 0%. So quite a reversal over the last year in the Treasury bonds, the Treasury bond yields, I should say. It looks like we're ticking up a bit here over the last couple of days, so we'll have to see if this continues. But yeah, 10-year Treasury bond yields continue to be the lowest, while 30 is right there in the middle. And the dollar here continues to go down, though we may look like we're slowing down a little bit compared to this massive runoff that we had here at the end of November. Now, of course, this is, a good sign for the economy. Riz has talked about that multiple times. If you missed that, go back to our last 2 webinars that we did. You can check those out on the channel. But yeah, definitely the dollar is starting to, or is rather continuing on its trip down. At this point, we'll have to see if we can find support here around the 100 zone, see if that holds up as support, or if we continue lower. Now, of course, this is kind of what they want. We want the dollar to be a little bit weaker than what it is so that, more people can use dollars, is really what it comes down to. Now, of course, you don't want it to go all the way down. That would be a bad thing. But, pulling this valuation back a little bit is definitely going to be a good thing in the long term. Right now, it's just a little bit too hot. And, of course, that's what the Fed is trying to do. They're trying to cool inflation down. One thing we haven't looked at a while, but I do want to pull up real quick, is Bitcoin. Bitcoin has been on quite the rally here since the beginning of the year. And again, not recommending that you take a position in Bitcoin. We don't have a position right now, but just wanted to bring your attention to this because we had been in the doldrums down here below 20,000 or actually even 18,000 for quite some time. And over the past, couple of weeks, Bitcoin has been really pushing back to the upside. So just something to keep an eye on here. We'll see if this continues, if we're having renewed faith in Bitcoin and cryptocurrency as a whole. But, for the most part, we're not recommending you take a position just yet. And, of course, we'll leave that up to you. Of course, cryptocurrency, incredibly volatile, as you can see, with this major push up here, while, the market, or meaning the S&P 500, has still been for the most part in a downtrend. But looking at the RSI here, Bitcoin currently incredibly overbought. So just be careful. Yeah, keep your eyes on that. I want to go ahead and open it up to questions, but I did get a question sent to me via PM, so I want to go ahead and do that first while everybody here in the live chat can go ahead and post their questions in there. I got a question from my man Panos. He said he wanted to get my 2 cents on a long position on CRWD. Let's take a look. Oops, might help if I type correctly. There we go. CrowdStrike, excuse me. So yeah, taking a look at this, we've definitely seemingly found some support here right around 94. Definitely seems to have found a base and is starting to push up a little bit. Let's see, we had earnings here back in October, and we're not scheduled to have them again until March, it looks like, for this one. So yeah, this actually looks pretty decent. I would be careful because obviously we could dip lower. He's waiting to see if we, confirm that this up movement. I would say we're looking pretty good, honestly, for the most part. Looking at a stop loss around 90, yeah, I think that seems fairly plausible. Profit, place to possibly take profit right around 120. I think that's a fairly reasonable move that could be accomplished here, in a week or maybe even longer. This one doesn't seem to move too incredibly fast. Yeah, it isn't bad, honestly. This is a pretty decent setup. A really nice hold here on around this 94 area. Definitely a supply zone there. There's a lot of people buying in that area, and we seem to be Athena. That's enough. And we definitely seem to be curling back up. So yeah, I would keep an eye on this one. The last thing I want though is to see something like this. So as long as we confirm this up move here, I think we should be in a good position. If you wanted to take a long position in this one, you have my blessing, which is worth about as much as the paper that it's written on, which of course is not anything at all because all I'm doing is talking here. Let me take a look here real quick and see. I don't know. No, we haven't posted the earnings calendar yet. I'll have to look that up here in a second. All right, but Sankit wants me to take a look at Walmart. Now, this is a personal favorite of mine as far as taking positions on this. Will it go up? Well, I mean, you're looking at the #1 brick and mortar store in the North America, for lack of a better term, definitely within the United States. Rolled over a bit here, which, pretty much following the market at this point, but didn't come to the 200, but got fairly close. My personal favorite area to buy on Walmart is right around here, around 135. However, if we continue to see upside in the market on Monday, I think this definitely could go higher. There's definitely that possibility. I will say, if you look at all this, yeah, we had, a pretty bad earnings season here. That was, a killer. Buying down here around 118, 119 would have been spectacular. But for those of us who don't have that option, which would be me, looking at it here, pretty decent spot to possibly take a starter position. I wouldn't be opposed to that, especially if you don't have any problem holding this longer term. This one, again, a really, really solid company, not going anywhere. Let's look here. Yeah, I mean, earnings are pretty solid here. Really good earnings. Revenue is good. Also got that dividend that you can keep an eye on, to possibly get a little bit of extra value out of there. So always looks good. Getting free money from just holding a stock. But yeah, I mean, I like Walmart. I think this looks like a pretty decent spot. And you could definitely take a starter position. Couldn't hurt. NVIDIA. Another personal favorite here on Riz Elite, one that we always keep an eye on. Yeah, I would say NVIDIA is looking pretty strong here so far, going into earnings later in February. So right around February 22nd is when we're going to report. That is after market close for NVIDIA. So that is definitely looking pretty good. Yeah, so NVIDIA is looking very good as opposed to its peers, Intel, AMD. Definitely looking good as far as that's concerned. I just want to be careful here around this area. This 188, we could see some resistance there if this historical area does hold true. Could be an area where we may see a rejection. But yeah, NVIDIA looking pretty strong, getting close to being overbought up here. And I think I spoke incorrectly on Bitcoin. I think I said oversold. I meant to say overbought. But really approaching the overbought area on RSI. Now, again, as we saw with Bitcoin, just because something goes overbought doesn't mean that it automatically rolls over. But definitely something to just be aware of. It's an additional indicator and something to keep an eye on. But again, NVIDIA, really solid company. I would have no problem holding this long term. Let's see. Looks like last was okay. This one, well, actually, this is the most recent earnings, so they missed a little bit, but you'll notice that they still were making money, even though they missed earnings a little bit here. But revenue was up. So, to me, that says that I think, NVIDIA is looking pretty solid, in my opinion. Just, the whole chip shortage thing is always an issue, something to be aware of, but definitely looking like we're rebounding here, and very solid day on Friday. Again, following the market a little bit, as the market was up quite a bit on Friday, excuse me. But yeah, I wouldn't feel too bad about taking some here. Maybe not a full position. I just worry about this area here, this 188 area, where we could encounter some resistance. Now, we may not. If the market continues to roll, I see no problem with this doing one of these. It definitely could, but it could also kind of do like one of these. Let's like hang out here and then come back down and then retest before we go higher. That's another possibility for what it could do. And of course, it just could roll over. If the market rolls over, if there's anything that happens in the Taiwan Straits and things like that, all of the chip manufacturers are going to take a hit if something like that happens. So just there are other factors in play here is basically what I'm trying to say. And just be aware of that. Keep an eye on it. And if you do take a starter position, I would look at it as a long-term hold, in my opinion. It may turn into a quick swing, but just the way the market has been behaving lately, it may be one of those things where you have to hold it a bit longer and maybe add to it as time goes on. So a starter position, I think, would be okay. I wouldn't be totally opposed, especially if the S&P 500 continues to roll on Monday. If not, maybe just be careful, maybe keep an eye on it, and then kind of go from there. One thing I did forget to do earlier was go ahead and take a look at the critical dates this week that are coming up here in the market. So we've got the GDP growth rate, quarter on quarter is coming up. So that's going to be a big one here on Thursday. And then Friday, looks like we've got core PCE price index is going to be coming up, as well as personal income and personal spending. So these are going to be some key indicators and key dates to keep an eye on this week. So it looks like the back half of the week, Thursday and Friday, is when most of our financials catalysts are going to be coming along. But of course, everybody is just watching earnings. That's really what it comes down to. And that is what everybody's going to be watching this week. So let's go ahead and take a look at who is reporting this week. All right, as you can see, we've got a lot of big names reporting this week, and we're starting off Monday with some banks that we're not paying too much attention to, but definitely Logitech, definitely a big tech name in there. Tuesday, we start in earnest, to be honest with you. Verizon, Johnson & Johnson, Lockheed Martin, and Halliburton all reporting before the open, along with some other big names in defense. Raytheon, GE, 3M is in there, and if you like playing railroads, Union Pacific as well. After the close, we've got Microsoft being the big name going to be reporting there. Everybody's going to be keeping an eye on that. And let's see. Moving on to Wednesday, we got Boeing before the open, as well as AT&T, Abbott, another pharmaceutical company that's a big name that's going to be in there. Then after the close, we've got Tesla. That ought to be an interesting one. I think a lot of people are going to be watching that, as well as IBM. Huge names there. And again, the railroad, CSX is going to be in there as well. Thursday, things slow down a little bit. We get more into the airlines with American Airlines and Southwest reporting before the open. MasterCard, another big name that's going to be in there. And whether you like them or not, the Blackstone Group is going to be reporting before the open as well. Some more airlines, JetBlue, Northrop Grumman, Alaska Airlines, all reporting before the open. Then after the close, we get some bigger names with Intel and Visa reporting, as well as L3, which is Logitech, if you're into that sort of thing. And then Friday, we're slowing down a little, but before the open, we do have Chevron and American Express reporting as two of the bigger names this week. So definitely, guys, earnings season has begun in earnest, and this is going to be what everybody is watching in the market come Monday. We're going to have to see whether this downtrend holds or not. That's going to be kind of the big indicator, in my opinion. Is earnings season going to be enough to push the market higher and push us over this 4,000 level? We tested it twice this week and we failed every time. So it's going to be interesting if it can push over the 200. We've got a lot of downward pressure on the market right now, especially with the Fed doing what they're doing. Everything happening overseas at this point, tensions in the South Pacific, and of course, with energy prices soaring, lots of things are going on. So I want to thank everybody for coming out. It was great having all of you. Riz sends his regards. He had some things he needed to do tonight, and of course, we appreciate him for everything that he does for us. But yeah, keep an eye on earnings this week, guys. That is going to be the main catalyst, and I hope you have a great rest of your weekend. Enjoy yourself. Take some time off. Go do some fun stuff. Enjoy life, and then we'll be back in the market on Monday.